Deven Choksey as well joins in on the show right now. Deven, hi, good morning. Good to have you on the show. Of course, a big sell off in the tech stocks in the US overnight. But what does it imply for India, which in any case has not really been the favorite, and the FIIs have been selling us relentlessly? Are we close to anywhere around a bottom, you think?
Yeah, good morning. If at all, I think it is going to be the advantage in India. The reason very simple. On one side, I think the technology innovators like USA has been, I think, charging the technology to the premium level. On the other side, I think the technology implementers like China have actually created a significant amount of disruption by way of bringing down the cost of adopting the technology. So in a viewpoint, I think when we are talking about adapting to the AI part of the era, I would think that I think starting from semiconductor to the data centers to the implementation of AI in the use cases, I would believe that I think India would be to the it will be to the advantage of India because we are equally quick in implementing some of the technology-led use cases, and that's where probably I think I would like to believe that we should be in a better position going forward. At the same time, with the cost of technology coming down, I think on the other side the use cases will probably increase, and that's where India would probably champion because India has the ability to create the use cases faster. So if at all I think we are seeing any positive, I would think that I think some of the key focus companies, particularly companies with engineering R&D, would probably have relatively better advantage in taking the advantage of I think availability of cheaper technology platforms.
So Deven, have you started shopping in this market?
Yeah, Nikunj, I guess I think the important part is that after you buy, you have to repent for a while for a reason that I think the good quality stocks at a significantly better valuation when we buy. Thereafter, we have to see the further fall in the stock, largely because of the fact that I think the fundamentals don't even intact. The challenge out here is that some of the weak hands are getting out of the market. And as I heard you a while back, I think some of the people I think who ended up picking significant large amount of IPO related companies in the portfolio at a phenomenally high valuations. I think they are the ones who are basically now exiting those stocks, and the collateral damage is now reaching out to some of the good quality stocks. So you pay price for holding the good quality stocks, of course, and at the same time you also pay the price for buying good quality stocks at low levels. But the reason that you should buy now is also the fact that yeah, in the recovery mode, when I think the market recovers, you are going to have significantly large advantage. So yes, I think we have been shopping into this market in some of the quality names.
111 points for Nifty, and we could be in for a dinky kind of a start, but will it sustain? Will it sustain? Deven, which are two or three large cap stocks which you think are worth betting on now?
Yeah, I think banking names definitely I think appear first in the list, likes of Bajaj Finance, Bajaj Housing Finance. They are the ones I think where I believe that everything is intact. The growth is intact. The consumer is available to them. The consumption is increasing on the retail side. So these companies, one is in the housing finance space, second is in the consumer finance space. There is a parent company like Bajaj Finance to Bajaj Housing Finance. So I believe that I think they are the ones I think which one could possibly look at. Even for that matter, with the corrected strategies, Kotak is also looking relatively more stronger than before. They are in each and every franchisee which they have in Kotak's fold. I think they are also equally doing well. So I would think that selectively the financial companies are the ones I think where you can have preference. In some of the manufacturings, probably I think you will have relatively better times. Companies like Bajaj Auto, again I think coming from Bajaj. But the fact remains that I think the strategy is working right for them to the premiumization of each and every model that they have been launching in the domestic as well as in the global market. So that company looks, I think, relatively more interesting. Some of the auto ancillary companies, which are, though you may not want to call them as a completely large cap, but in the high range of mid caps, I think they are relatively a better place. So yes, I think we definitely like to buy into some companies, including engineering R&D that we have mentioning. I think some of the companies are really looking interesting from the current valuation perspective. So one could possibly look into those kind of companies from investments.
All three of you, a simple question. If somebody is owning small cap, What should they do? Devan bhai? I mean, a company which is less than 10,000 crore, I'm using that as a small cap, right? Anybody owning small cap, what they should do?
I think respectively you should look at the business. I think there are plenty of small cap companies which are available at a compelling valuations, and the business outlook remains, I think, absolutely very strong and convincing. I guess I think that is a time when you should buy because overall environment and the mood in the market is quite depressive at this point of time for small cap, mid cap. Largely because of the fact that I think many of them investors have bought, I think, at a higher valuations. But those companies which are now started getting available at a cheaper valuations, I wouldn't be afraid of buying them into the portfolio. There is a waiting period of 1.5 to 2 years in those companies because I think the new buying, fresh buying into the mid cap, small cap will take time. But in my viewpoint, I think some good quality names, I think definitely would figure well as far as I think the buying in the portfolio is concerned.
Question to you, Naresh. If somebody is owning a small cap stock where the chips are already down by 20-25%, time to double up or time to digest, take the bitter pill and get out? Naresh?
So the first part is SEBI considers anything below 33,000 crores to be small cap. So the universe is much larger. But the view is the part to it is one needs to get into underperformers and consolidating stocks which have been forgotten because that is what wakes up after the correction. The problem is there has been over participation in parabolic moves. Wherein we saw earlier it was defense, railways, then it is EMS, renewables, jewelry, etc. So one needs to be ready to make that switch, wherein get out of names which have gone up massively. In the last 2 years, stocks have gone up 5x, 7x, and they've even if they've corrected 25-30%, you want to get out of them and get into the new movers. So the switch is more important, apart from holding on to the names which have done nothing over the last 2 years. So I would be focusing on underperformers as such on the small cap. And if you are into small caps, you have to be able to digest such 25% corrections very often.
So, sir, same
Yeah.
question.
Yeah, so I
You
think
didn't pay attention to what I asked.
no, I think we were in other discussion. But I think for small caps, I believe that it's not a time to double up, at least as of now, because small caps historically they've generally moved when there is a lot of confidence and the sentiment is absolutely buoyant. We are nowhere in that kind of a zone for the market. So yes, there is of course a lot of risk aversion, portfolio churning, which is happening, moving towards large cap names. That could be maybe a temporary shift. But I think whenever the markets get back into recovery, the sentiment becomes positive. I think that could be a time where maybe doubling up on small cap names individually and I think selectively could be a better strategy.
There'll be a lot of stocks which are going to be in focus, and Federal Bank, the fact that their business momentum is now at a 14-quarter low, the NIMS at an 18-quarter low, that's going to be one of the key stocks to look out for. Other than that, Union Bank also has come out with weak set of numbers. The deposit growth is lowest in about almost 13 quarters. Advances growth as well, lowest in about 12 quarters. And even that's the thing, other than these large private banks wherein there have been positive surprises or inline set of numbers like an ICICI Bank, Kotak or an HDFC Bank, some of these smaller banks, the pain is quite hard hit. I mean, look at the way Federal and Union Bank and their numbers have come out.
It's not going to be very surprising though to anybody because on one side the competitiveness in the banking space is increasing. Adoption of AI is also increasing both in the area of sanctioning the loan as well as disbursing and the managing the relationship. So the technology use and the compliance itself, I think, is heavy cost in a way. In my viewpoint, the larger the size of the balance sheet for banks, better it would be in a given situation because the growth rate in the country demands larger participation by some of the big players. The smaller and the mid-sized players in the banking space will be vulnerable going forward on both counts. On one side, the cost of funds. Second side, I think the challenge would remain pertaining to lending it to the borrowers who are not as strong. And as a result of which, I think always running a threat of having the non-performing assets in the book in given situation. So in my viewpoint, I think the if at all one has to take a larger exposure, it will have to be larger banks, larger size balance sheet of banks and NBFCs. That is where probably we'll succeed in the investment. That's what our take is.
361. Even is that your sense too, that right now at least one is safer avoiding IT till we actually see what could be the implications of DeepSeek, or how much of a damage do some of the tech stocks in the Nasdaq see, and the rub off perhaps on our IT names as well?
Maybe on a relative valuation point of view, you might be wanting to remain a little bit more careful because of, I think, the allocation of money not entering into the IT space. But in my viewpoint, as I explained, I think the engineering R&D space within the IT would remain favorable of the lot, because on one side we are talking about adoption of technology, on the other side I think somebody has to implement this technology and provide that services to the end customer. The likes of Tata Technologies, the likes of Tata Elxsi, the KPITs, LTTS, I think they are the ones who are basically playing a significant amount of role in providing the use case scenarios to their customers. And that's where I think their niche focus is basically helping them. So, corrective downside in the stock prices and valuation becoming attractive, I would think that selectively some of these counters would remain interesting from buying into the portfolio in current times.
Right. Okay, that's the take coming in. See, hotels set to list tomorrow. How do you think it's going to change the landscape of the listed hospitality players?
There is a pertinent demand in this particular space in the portfolio, and that is where probably I think the case is going to be stronger for the listed ITC hotels. Heading in the direction of 20,000 rooms plus, which is a 50% plus kind of a growth in next 4 5 years from now, and that too the entire portfolio with own property versus lease out property, the mix is going to be in favor of the asset light model. So that's where probably I think one would like to believe that the growth along with the margins will be there in the business for this particular company. I would think that I think there is going to be a case for including this particular stock into the portfolio of the large investors as well. Also because of the fact that I think India is expanding on not only business tourism, not only on the leisure tourism, but also on the spiritual tourism as we are seeing it. And wherever I think these companies are positioning themselves with the category of hotels that they have built, I would think that both Indian hotels as well as ITC would have a very strong case going forward, because they are expanding the footprint considering all the three fabrics that we are talking about. So overall, I think we remain distinctly bullish about the prospects going forward. And if an opportunity comes along in the depressed market at a cheaper price, it would be a worth buying opportunity into the portfolio.
All right, that's the take on ITC. But Deven, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us.
If you like this video, then like, share and subscribe to ET Now.